Welcome to an update to the Federal Milk Marketing Order 33. This is Dr. Lawrence Jones with FARME Institute, and I'm recording this on September 16th, 2023, because we just got the August data available to us. So let's start with where the statistical uniform price came in. Now, again, these are in Cleveland, Ohio. So again, you're going to have a minor difference dependent upon your location. But the statistical uniform price was at 1807. And if we look at that, that was $1.67 higher than last month, which was a nice increase in milk price. But if we look at this again historically, we're pretty well at the top of where we were in 2019, higher than we were 2020. It was only this run up that was higher. And in fact, we're $7.71 lower than the absolutely peak of that run up there. So how did you compare to the rest of the country? Because that's always a question. And you were up $1.67. Now you take Minnesota, Wisconsin, they were up $3.17. It's like, wow, how did they do so much better than us? Well, the reason it's got to do with how much of the different classes. And class 3 came up $3.42. And we'll look at that in a minute. But overall, across the nation, about $1.99. So you were just a little bit lower than what the national average was. And the percent fat across the nation was 3.97, with the pool very high in the northwest at 414. You guys were at 394. And if we look at specifically, your 394 was higher than last year, which was a 387. So you're continuing this march up in higher fat in milk. And here's the percent fat for the nation. These come out with the egg prices, and we're going to get that here in another 2 weeks or so. But if we look across nation, we've just been on this annual growth rate about 1.1% per year of increased fat. And each of these red dots are August of the previous years. And so it has just been marching up consistently. I mean, back in 2015, we were like 3.6, and here we are now, pushing 4 pretty hard. Protein, we didn't do just as good in 313 for order 33. That came down, and part of that is just due to price. The price of protein has been very, very low, and so we're expecting that people aren't feeding for it as much as they were. Well, that's likely to change here in the future. Now, I wanted to do a couple of what ifs for you guys to kind of give you an idea of where you're at. And so this is going to be a little bit of building a scenario here. So what I put in here was your statistical uniform price, and then the pay price with your added components. And again, this is just the pay price without the quality, the premiums, or the deductions of hauling and those sorts of things. And for the last 12 months, you were about $2.15 above the statistical uniform price. So if somebody told you that you had a statistical uniform price of around $20, that means you probably had a pay price of around $2.15. Now, if we look at just this last month, your price was $11.91 due to fat, $6.53 due to protein, and very little due to fluid, $1.26. That's other solids and PPD kind of numbers. So again, fat has been the driver of your price. But a number I want you to remember is when we look at the statistical uniform price, we can kind of figure out what the pay price is or back and forth. So your class 3 utilization right now was right around 50%, and it's been hanging in here, right around 50% for most of 2022 and 2023. You can see where you're depooling down here, and you're probably depooling a little bit of class 4 right now. But we kind of remember that class 1 is also about half influenced by class 3 and half influenced by class 4. So when I look at your data, it would suggest that overall you were about 70% influenced by class 3, and that's got to do with the 50% class 3 utilization plus half of the class 1. So again, that's the blend price that we're going to use, is 70% class 3. So we can look at the blend price for the next 12 months. Again, I did 70% class 3, 30% class 4, and that came in right at 1905. Now, if we add $1 to that, and you say, where did you come up with that dollar, Larry? Well, I went back and I just looked at the difference between the 70-30 blend and the statistical uniform price, and it's about $1 difference. And so if that says we've got a 1905, we should have about a $20.05 statistical uniform price. And again, let's use that $2.15 we saw a few minutes ago. So what I'm going to come up with is a pay price based on futures right now of around $20.20 for the next 12 months. So here's what the class 3 futures look like, and they are in blue here. The orange line, which doesn't vary very much, is what the components are. And again, at the end of the day, these have to come together because for class 3, cheese, whey, and butter are all brought together in a mathematical formula to give you the actual class 3 price. But the green line is the futures plus 40 cents, which is what I normally expect the contracts to come in. And in fact, we see October is just about where it's supposed to be right now. September is pretty well priced, and so this difference here is just not even important because we've already gone through the pricing. We're going to release September here in a couple weeks. But when I look at this, kind of ask the question, what are our risks? And we're going to look at that in a minute. So first off, I want to tell you, I do not have a license for trading commodities, and these are not recommendations at all. So I'm just going to tell you kind of some of the different things that are going on. And so out here in December, a $19 call right now is going for about 50 cents. Now, what does that mean? That says let's put a maximum on your milk price of $19.50. And if the price is under 19, you get to put 50 cents a hundredweight into your pocket. And so the question that we got to ask right now is, in December, do we expect this to go flying up to 1950, when it's at 1830, somewhere in there? So here is the actual December contract. Up here is 1950. Right now it's at 1925. It hasn't been at 1950 since March, and the question is, what is the risk of this going above it? Now, if it goes above 1950, again, you're going to max your price out at 1950 on that scenario of selling that call for 50 cents. Now, I wanted to show you the class 4 numbers because what we've got here is the components are still in orange, but they really deviate after about February of next year. And the problem is there's very low liquidity. Now, what's important about this is if you look at the board right now, class 4 in August is 1950, okay? But if you take the value of butter and non-fat dry milk, it's 1983. And so the question is, that's 30 cents a hundredweight. Is it really 1950 or is it 1983? The official number is 1950, but problem with all of this is the low liquidity. The fact that nobody has bought or sold class 4 out here, even though the underlying commodities have changed, is making that difference. Now, I wanted to kind of move right into one more thing that I think you've really got to start paying attention to, because these federal milk marketing order reforms are ongoing right now. And one that everybody is really trying to do is come back to the higher of class 3 and class 4, as opposed to right now where the average of 3 and 4 plus 74 cents. So the question is, what would that mean to you? Right now, for the next 12 months, according to the official closes on Friday, you're going to lose 33 cents a hundredweight on class 1 milk. In other words, The average plus 74 cents is 34 cents higher. And so I really question what is going on in this discussion of the federal milk marketing reforms, because I think some of them haven't been thought through quite as much as they were. Now, the reason for this is during the pandemic, yes, this was severely changed, but the pandemic is more or less over. We got to look at what the data is telling us now. And right now, the average plus 74 cents is 33 cents better on class 1 than going to the higher of. So I want to graph these out into the same kind of scenario where I've got 3 and 4 together. And the question I want to ask is, what risk do you have out here in the second quarter of next year? Because these are both headed up in fairly nice fashion here. Are these going to continue heading up, or do you have a risk? Well, one of the questions is what's going on with milk production. So this is going to take us right back to the federal milk marketing order, because we can look at the change in daily production compared to July. And if we look at the pooled data, it's right at 100%. So we had exactly the same production in the pool as we did in August. Now, class 1 was up 11%, and again, that's only 27% of the milk. Class 3 was actually up about 4%, and that was interesting because everybody's been telling us that milk is really short for cheese, but in fact that went up. Now, class 4 came down about 1.4%. Again, so not a big deal, but if some are up and it's even, then one of them has to come down. Now we've got Florida at up 12%, and what is going on? Well, it turns out that a lot of these areas, including Michigan, Indiana, Ohio, were exporting milk to Florida. The pool numbers are plants, and so it's just which plant is in that particular region. So if you take milk from Michigan and send it to Florida, that shows up in the Florida number and not in the Michigan number. Arizona was down 13%. Again, a lot of people are going to say, well, that was a lot of heat. Well, New Mexico and California and Texas were just as hot. So I think what happened is this milk moved east and west. Next is the herd size. And right now, everybody's suspecting that the herd size is coming down. I am not in that camp. Here's our latest slaughter data. We're at 57,561 slaughtered on the week ending the 2nd of September. Remember that these down ones are all holidays. We got Thanksgiving, Christmas, July 4th. So this next one is going to be down because we've got Labor Day in there, a 4-day week. But this box is my 32 to 34% call rate. Now, if we add another 6% for deads, that puts us, at a maximum of 40% turnover rate. At 40% turnover rate, I'm expecting the herd size to be about the same. Again, when I look at particular herd data, as long as we stay under a total of 40% turnover rate, the herd stays about the same, or about 0.8 heifers per 1 cow. So we got these cow numbers actually going to come out on Monday in the milk production report. But right now we're at 9.4 million. And again, USDA is always plus or minus about 20,000. So it's really a lot of variation in here. Some people are arguing that this is going to come down to 9.38. I wouldn't be surprised to see it flat or a little upward pressure. Now again, what I'm thinking is about 9.4 plus or minus 10,000. So it could go kind of either way, but I don't think that we're in this major contraction, that we were back here in 2019. Again, we're just kind of bouncing around 9.4 plus or minus a little bit. What's going on globally? That's the big question. The last global dairy trade was up 2.7. The next one is actually projected right now to be up around 7%. But that's because of whole milk powder. The world market for whole milk powder right now is $12.27. And so seeing that come up significantly is a good thing, because I mean that's just way out of line with everything else. But if we look at our prices on the latest spot, okay, compared to what this global dairy trade is, for example, global price of butter is 204, we're at 272. We are not going to be exporting butter. Cheddar is $1.86. Blocks were $1.88. It takes 20 cents to get these products offshore. Non-fat dry milk's $1.10. We're at $1.11. Again, we are just not going to be exporting a lot of this data with these kind of global prices right now. So just wanted to look at these spot prices just a little bit because it tells us what's going on. This is a graph that I do, which is a spot cheese, and I put trends in there and I look for differences. And what's happened is in the last week, spot cheese has come on this downward channel. Again, we had this significant, 4 or 5 day run up that brought this back up to almost $2. We went sideways for about 2 weeks. And then now it looks like we're in this downward channel. Now, again, it could surprise me this next week and we could come back up, but right now it is headed down. The other question is cheese stocks. They're reasonably high, around 1.5 billion. We're expecting them to come down a little bit when we get the cold storage report in a week. But I'm going to start arguing that I think this cold storage number is a broken model. And what I say by that is I kind of have this suspicion, and I don't have a lot of data for it right now, that the cheese plants have kind of gotten big enough that they're actually using this cold storage as more of an inflation hedge and hedging against prices as opposed to one of these scenarios where we just put excess cheese in there and we always sell whatever we have. So I think we've got to take a look at this. I'll expand on that more at a later date. Whey prices have been hanging in there 28 to 32. They kind of went up, came down, just kind of not moving. If we look at butter, as we said earlier, it's very high at 277 with the global at around 204. And then butter stocks have been low, and so I've been kind of bullish on butter. But right now the trend is probably down a little bit after the first of the year, but we'll have to see how it comes together. There are some that are thinking we're going to have $3 butter by the end of the year with the holidays. So let's go back to this question. What do you have to risk? So right now, August class 3 is 1873, and the trade has $1.92 cheese, 39.5-cent whey, and 254 butter. So that's going to give you these components, and that's what's going to come in. So I always come back and ask, if we think this is going to change, which of these components do we think are going to change? And so all I did was take cheese down to $1.90, and I did give you a little bit of butter up to $3, and whey at 30 cents, and all of a sudden we are down here to 18.17. So this doesn't take very much to see this drop, 60, 70 cents. Or if we take cheese down to $1.85, which I think is a more realistic number, now all of a sudden we're down to 17.69. So we're down in here somewhere. So this is going to drop, potentially $1. So let's look at the class 4 numbers. Again, right now the trade's at 254 butter, and non-fat dry milk is at $1.30, even though it's got a premium to the global dairy trade. And so we're at 19.83 up here. Again, the actual contracts are 19.50, but again, there's just low liquidity and they aren't realistic. But if butter comes down to $2.50 and non-fat dry milk comes down to $1.20 or stays around $1.20, all of a sudden we've taken $1 off of these contracts also out here in August. So I just tried to put this together for you. Right now we've got 1873, 1980, which gives us a 22.77 pay price for August. If that comes down to 1769, 1874, we're going to be at 2169. So there's a potential loss of about $1 on those contracts. Now, again, there's also, they could go up, but the data doesn't point in that direction at this point. Just real quick on grains, grains have been under pressure. One of the things I like to look at is an index of 8 pounds of corn, 8 pounds of soybean meal. We're at $2.24 on that. That's cheap, okay? That's been as high as 260, 270, 280. So we've pulled about 50 cents a cow a day off of the cost of corn and beans. So I like to put these into what I call my rolling 12-month averages. So this is, what do the contracts look like in the next 12 months? We're really at the bottom of this channel. So I've got a support at about 175 or so, resistance at 230, and that corn is right at the bottom. And we're going to wait to see what we get for a harvest low. But long term, this probably has a little upward trend to it. Soybean meal is also right in the middle of our 370, up to 420. It's kind of been bouncing around, ever since April in that channel, and it's been headed down here for just a little bit. I do not have a license to make any kind of a recommendation to you guys, and I am not doing that at all. I'm just telling you what I'm hearing out in the field. So one brokerage firm came in and said, these calls for December 2024 corn look very attractive. And so that's one of the things that we're kind of tracking right now is this December corn of a year from now is, down around 508. What is the pressure on that, a year from now? Well, there's lots of geopolitical things. There's lots of weather things. It has been up over 6. And so what they were recommending is buying a call. Now, what happens when you buy a call, you just guarantee that price, for a premium. I think the $6 calls are around 15 cents and the 15.50 around 25 cents. So what that does is that locks your price in a year from now, assuming that this has, significant upward pressure. But again, don't take the risk of actually buying it now and having it drop to $4. And so you keep the downside open for you with buying a call. So last month I did talk to you a little bit about diesel. This is low sulfur diesel. That was at 294, and unfortunately I'll show you the current numbers. We're up to 317. So from even just a month ago, we've really tacked on another 20-30 cents a gallon in those low sulfur diesel. And if we look at this drought monitor, we're right in the middle of harvest now, and I hope everybody has a great corn silage harvest. And it looks like Michigan is not in too bad a shape. But the western corn belt, in particular the Texas, Louisiana, Alabama, is really, really dry in the drought monitor. And the thing that we just got to watch on this whole area is the Mississippi River, because you remember a year ago there was just a tremendous supply chain issue with getting barges up and down the river. So this is the level at Memphis. Right now we're 8.5 feet below stage, they claim from here, and this has the potential of going down significantly in low stages at minus 5 feet. So we're 3.5 feet below low stage, and then headed down depending upon what kind of rains we get. This could become a problem with getting barges out of the Midwest. All right, that's it for me, and I'll get you another report next month.